Hi, and welcome back to Sweetest Trade. Today it'll just be a quick video on my trades on Amazon. But before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes only. Wow, Amazon is down again 2% today. It was down 2% on Friday and 2% today. That is over 150 points in the last 2 days. Let's look at this chart. So on Friday, we can see that it went all the way to 33.25. And then today, it just sold off, closing at 31.80. It's not looking good for Amazon. What's frustrating is that every time NASDAQ is green, Amazon struggles to keep green, but it has no problem going down 100 points when NASDAQ is red. So that was what I was afraid of it would happen, because the beginning of this month, NASDAQ was green every single day and Amazon struggled to keep green. And I knew that once NASDAQ turned red, it would not turn out good for Amazon. And I was right. It went down over 200 points. Let's just take a look back. Right, earnings was on February 3rd and it went above 3,400. So 3,400 to now below 3,200. That's incredible. I mean, it doesn't surprise me because Amazon has not moved for the past 6 months. And now I'm just digging myself deeper and deeper in the hole. So let's take a look at my trades. I have 320 shares of Amazon, which is now down $89,000. It's not $100,000 yet because I remember I was down over $100,000 just on the shares. Total, I am down over $100,000 because I have 4 options now, 4 call options of Amazon. I had no choice but to average down. And I actually bought it when it was high this morning. And it went down even more. So it kind of reminds me of my Zoom calls. I just keep averaging down, and it just never recovered. I wonder if that's how Amazon's going to be. We still have about a little less than 2 months now. Time is ticking. There's just no time. Someone said that I have plenty of time, but every day that goes by, let's look here. It loses $550 every single day now. And the closer that we get to expiration dates, which is April 16th, it will lose more value. So as you can see, I have $75,000 worth of option contracts. It's horrible. Never again will I buy call options. I haven't bought any call options except for Amazon just because I needed to average down, hoping that once it reverses, if it reverses before then, I can quickly break even. Now I'm trying to break even on my options and on my shares. I'm not too worried about the shares because I can hold on to them. But options, they have an expiration date. And I cannot stress this enough that when you buy short-term options, it's so risky. As you can see here with Amazon, that I'm already down $30,000. So you just can't predict which direction Amazon will go. For instance, today, Tesla went down to almost 700. Let's check out Tesla. Tesla closed at 714. After hours, it went to 710. So I had 300 shares of Tesla. I sold 3 cover calls. And I was a little disappointed that I had to get rid of my shares when it was around 790, 800, 810. But looking back at it now, yes, I shouldn't have been disappointed because I was able to collect a small premium. And now here we are below what I sold it for. So I did sell another cash secure put, but I sold it this morning. And this morning it was around 740. So let's take a look at that. This is a 735 strike price. I only collected $1,000, but it's now worth $3,300. So I didn't miss a $2,000 profit. I did miss $2,000 worth of premiums. But that's okay because I can roll this over next week, or I can just let it get assigned because I wanted to buy Tesla at a lower price. And this is my chance to. My break even now would be 725. So that's a good thing about selling cash secure puts. It's essentially setting a buy limit. So with this, it's saying I don't mind buying 100 shares at $7.35. Selling a cash secure put, I was able to collect a pretty decent premium. Oh, I don't have any shares of Tesla right now. And I also tried to do a Tesla challenge, but good thing I didn't because Tesla has just gone up way too much in the past 5 years. Let's just take a look at the charts. It's gone up a lot since September, and after the split, it's just continued to go up all the way to $900. And right now, it's actually the first time it came below $750 since January. And tomorrow, if the market is red, this can continue to go down even more. Let's just check and see what the futures are at right now. So futures are green, but that can easily reverse in the morning. I've seen futures trading red at night and then recovering and vice versa. So you can't really rely on the futures for morning's price. That's why I would not buy a call option. I do remember buying a call option on Tesla and I lost $8,000. It expired worthless. And I haven't learned my lesson since then, but now I think I'm going to learn my lesson with Amazon. If it expires worthless, I don't even know what I'm going to do because that's $75,000 just down the drain. So think twice before you buy call options. Very risky. And I know that you can make a lot of money if the stock goes the right way, but who can really predict which way a stock price will go? Just like CCIV, I think a lot of people thought that CCIV would go up once the merger was announced, and it was announced and it went down. So it closed at 57.37, and then once it was announced, it started selling off. Take a look at this chart. It went all the way to 62, and this was around 2 o'clock. And then it went all the way down to $38 around 4 p.m. after hours. So it's very crucial that you know what you're getting yourself into before buying any call options. And that's all I wanted to share are my trades, and I hope that you guys will think twice before buying short-term call options because those are just very risky. I don't know what to do right now. I'm not sure if it's going to recover. It's going to reverse back. Some people say it's still going to go to 3,500, but I just don't see 3,500 in the next few weeks. Let me know what your thoughts are on Amazon, Tesla, or CCIV. Thanks for watching.